Today we are learning how to combine trend lines and price action in the best possible way to find the best trades, understand charts on a very deep level, and improve our trading step by step. Alright, so let's get started, and I've prepared more than 40 trade and chart studies in this video. So right now let's start with this chart, and you can see we have a trend line here that describes the long-term trend, and also we have a trend line that describes this pattern. And also when we zoom out, now you can see that the price action here was trading at a very important historic high that already led to a reversal. And what is very common to see, the market spike through such levels, and you can see afterwards we moved lower. And what we want to do when we examine a chart, we are looking for positive confluence. And what is positive confluence? Positive confluence are signals, criteria, or conditions that speak for a specific trade idea. So in this example, what we could look for as a trading plan is a reversal to the downside. So we would look for positive confluence in that case that speaks for a short trading idea. And also we have negative confluence. Negative confluence are signals, criteria, or conditions that speak against a specific trade idea. And ideally, when you are creating your trading plans and have trading ideas, you want to have way more positive than negative confluence. And the more positive confluence you have, the better it is. And if you have negative confluence factors, very often you will see that this will cancel a trade idea. Some traders are so strict that even if they just have one negative confluence, some specific condition or criteria that speaks against their trade idea, they will not take that trade. So it's very important and very helpful to look at a chart in the light of positive and negative confluence. So let's do that now. And what we see here is that it does make sense to look for a short at a previous major resistance area, right? So our first positive confluence. It also makes sense to look for a reversal in a mature trend stage. So the trend that has been going up here, that we are describing with this long-term trend line, has been moving higher for a long time. You can see that we moved higher in many trend ways, and it took the market a few months actually to unfold here. Also, we have a long consolidation. With this short-term trend line here, you can see we are very nicely able to describe this long-term pattern. And what you will often see is that if the market trades sideways for that long, very often this is not going to lead to a continuation, but more to a reversal. So this will turn often into a distribution. And very often you will see in a mature trend at a resistance, if you see this prolonged sideways trading, very often more selling is to come. Also, we have lower highs here. You can see this is the highest high after the fake breakout attempt. Then you can see we make a lower high here, lower high, and here. So we have lower highs. A lot of positive confluence that would all agree and signal more selling is likely to come. When we zoom in, you can see we have this pressure pattern. Some traders may even believe this is maybe a head and shoulders, right? We could say here's our left shoulder. Here, this could be our head with a kind of a double top, and then the right shoulder is here with the lower highs. And here we have our lower bounce pattern, which is a very strong pressure building pattern. A lot of pressure is building up here just above the breakout area, and you can see we have the two trend lines coming together. If the market can get below this area, then it's a very high likelihood that we're going to see more short to come. And we don't have a single negative confluence for now, right? Only positive confluence. So let's keep observing. And afterwards, we have another positive confluence. We have the break and the retest. The break below the structure, and then the successful retest the way it looks right now. When we zoom in, you can see here's a nice pin bar that is then confirming the retest. And this is now our signal that we are rolling over to a new downtrend, right? We are breaking out of the consolidation, and we are starting to make lower lows and lower highs. Not only lower highs like here, but also lower lows. And you can see after the retest, the trend unfolded nicely and we rolled over. And all of this pressure that's been building up here in the distribution is then released here, and you can see how fast the market collapses. What is the sign of the pressure building here? First of all, we have a long uptrend, and I talked about this in my last video. The longer the market has been moving in a given direction, more people, more traders will have more unrealized profits. And then when they see signs of exhaustion, that a trend is not able to continue, they will think about profit taking. And this profit taking is then contributing to the pressure. Also, the price is probably so high that a lot of new traders and new sellers will come into the market. So we have double the selling exposure, which is then the pressure that's building here, a lot of profit taking and a lot of new sellers. And then once the balance is tipping, once we're reaching this tipping point, we are completely rolling over. Next example, we are starting here with a channel, right? We have two trend lines. One trend line describes the upper part of the price action and one trend line the lower part. All right. But is this enough? Not quite. We can zoom out, and when we zoom out, we can see that the channel is here the most recent price action. And where does it occur? It occurs in a long-term uptrend. And the most interesting thing when you analyze uptrends or when you analyze trends in general is to compare the bullish and the bearish phases. So here we have clearly a very strong impulsive bullish trend, right? The market is moving higher and there's very little, almost no bearish interaction. But here you can see the market is moving lower, but not really strongly, right? So technically we are still very much in an overall long-term bull market. This is not enough to tell us, okay, we are now completely in a bear market, right? We just have a little bit of a channel. So it looks like this market may have a better tendency or higher chance to continue higher. So we want to look for bullish confirmation and bullish continuation in the long-term uptrend so that this is then at the end looking like a flag pattern. And what we have here is two things. We have the failed continuation. So you can see in the first part of this channel, the market made lower lows. And here suddenly this was not the case anymore and we started to make higher lows. Also, we have the break and retest pattern. So we get above the upper trend line and we retest the trend line as support now, whereas previously it was resistance. Also, we are getting above this flip zone. 128 seems to be a round number that the market is paying attention to. It was previous support, turns into resistance, and then on the breakout, it becomes support again. And this is a very, very strong bullish signal. So we can say we have a lot of things that speak for our bullish trade idea, right? When we zoom out, we have the long-term bullish trend. We have a very weak flag for now. We have the continuation breakout here. We have the failed continuation here to the downside, and we're getting above the support and resistance level. And then you can see afterwards we have the new trend wave, and that is then the continuation. In the initial part, we have a very strong bullish sequence, then a very weak bearish corrective wave, and then we are continuing and getting back to the overall strong bullish sentiment. Another example, and now we look at a channel in a different way, and we have a channel in a downward trend, right? It looks like the market has kind of rolled over, and here you can see the channel is quite long. And if you compare to the previous uptrend, you can see this is not anymore like what we've seen previously with the flag. This is now a very serious downtrending move, right? And we can zoom in further, and what we see is, first of all, a very strong selling impulse of the resistance. It's always good to see if you're in a downtrend that the bearish candles are larger and that you have those strong momentum candles into the trend direction. Also, it seems like we're building the lower bounce. The market shows signs that we are sticking to the trend line to the downside. Here you can see it a little bit better. The breakout happens and you can see the market is really staying at the trend line here pre-breakout. That's a very strong bearish signal. And then you can see we unfold and the trend is continued downside. So in this case, the channel is more of a continuation, whereas previously, if the channel marks or looks like a flag, it is more of a continuation in a long-term trend. Here, a very different example. We are in an overall downtrend, right? We're coming with a weak phase here, very strong selling here, and then we bottom out, which is not untypical. It's not unusual. After this strong selling, probably a lot of traders who have sold now going to consider taking profits, or maybe a lot of new sellers will come into the markets and then look for short opportunities because you are technically in a downtrend, right? We also see that we have the upper trend line here, which shows us the pressure that is building on the short side because the trend line is moving lower. It shows us that we're making lower highs, right? That's a very bearish signal. And also we have a horizontal support level. So the market keeps pushing into the same level here over and over again. And that's a very bearish signal. And then you can see afterwards the market followed through. After the consolidation, we go back to trending mode. So I've mentioned this many times in the past. It is always a good idea and it's always a good skill as a trader to learn to distinguish between corrective waves, those sideways phases, and trends. Because what you want to do is you want to trade trends and you want to avoid those sideways phases. But it's very important to know about those sideways phases because those sideways phases, the corrective waves, they connect trends. So if you're able to spot them, you have to remain patient, and then look for clear signs that we are clearing such a range and continuing the trending mode. Here, another example. What we have, strong downtrend, weak correction, right? So after the downtrend here, if this would have been a reversal, you probably would expect a lot more bullish pressure, a lot more steep rise in price, but that's not the case. We have a very weak and shallow sideways phase. So we could say, okay, this is way more bearish than bullish, especially if we look at the long-term picture where we are technically in a long-term downtrend. We can zoom in and we see our pressure pattern again. We see that the market is really struggling here to get above and away from this trend line. We have consecutive lower highs, maybe even a resistance here, and we keep pounding into this trend line. And then we have the breakout. So again, a lot of things are coming together. We have the continuation afterwards. And again, it's really helpful to understand and look at those trend wave dynamics. Very strong trend wave, very weak trend wave. So looking at the angle and the duration a market spends at a specific price or at a specific price area can be really helpful to understand the power dynamics. We can also use a trend line in a multi-time frame context, obviously. So we can start on a higher time frame. This is the daily time frame, and we have a downward sloping trend line. Looks more like a range, but even in a range, it can pay off to trade around the edges. So we want to wait for the market to reach the edge or the borders, the boundaries of a sideways market. And here we have the trend line. So at this point, you can see we have a little bit more weakness coming into the market, and that could be a good sign. So let's jump to a lower time frame. And on the 1 hour, you can see we have this trend line here. And this is what we saw on the higher time frame, the early signs of rejection. Not enough yet, though. So this is not enough to go short at all. So we have to wait a little bit longer. And what we see is that the next time the market reaches this trend line, we have our lower bounce. The market is not able to pull away at all. For now, obviously. There could be a push, but if there's a breakout happening and if we get below the low and below the trend line, that would definitely signal more selling. And that's what happens. You can see the pressure that is building here is released. Why is there so much pressure? Because probably a lot of people who have been buying up here now realize that we hit the upper boundary of the trend line, of the range. Also, it doesn't really look strong. So everybody who was buying and was initially hoping to see a breakout probably kind of got scared and worried a little bit and then took profits. And this profit taking is then accelerating here the downside momentum. Here we have more of a complex example. So what do we have? We start with an uptrend, and then the uptrend seems to be over. We cannot break above this high here. And then afterwards, we see that the market is building this consolidation, right? It also looks like a distribution. It's very important and it's very helpful to study distribution and accumulation patterns to understand what causes a market to roll over into a new trend. What is a signal that a trend is ending and turning into the trend into the opposite? And what we have here are lower highs, and we have a strong rejection here as well. So we have a failed breakout attempt. And if we zoom in, you can see this is the huge failed breakout attempt. And remember in my last video, if you see at a failed breakout attempt that afterwards there is strong selling coming, this is a clear indication that this is a power shift here. We went from trying to break higher to complete rejection and the realization that we are not in a bull market, and it's way more likely to see a continuation here to the downside. And that's why you see the acceleration very often at fakeouts. So the acceleration is a very important positive confluence, and you can see afterwards the market really rolled over. We can also use and look at trendline breakouts, right? So here it seems like we have the long-term trend line, and it looks like we're breaking out. We also have the fake out here that led to this push here. So let's zoom in. And what we see after the breakout, the market is coming back into the trend line. And now it's really time to pay attention and close attention, because very often the trend line and support levels will work the same. Very often you can see on a support and resistance level that resistance can turn into support. And the same holds true for trend lines. Sometimes a trend line resistance turns into a trend line support, and the market will bounce off of that. Not automatically do we go long here. We need to look further, and we can zoom in and see that we have this noise zone. The market seems to be struggling in this area, right? But if we can get above this, this would then signal more buying to come. And you can see we have more buying, and this is the key here. We have the pivot change. We go from testing the pivot as resistance to testing it as support. And especially in this context that we're looking at, we are already above the trend line. we already want to trade long, and this is the final piece. I've made many videos in the past about pivots, and the pivot has easily become one of my favorite trading tools in the past. And I would really recommend to study those break and retests because they are really high probability setups. Let's look at a very interesting long-term example. So we have a huge trend line, right? We have the first touch point after the triple top, second and third. We are back here. All right, so let's look at this now because it seems to be a lot of noise. But we can see that we have a specific trend structure in this market at least. We have support that on the breakout turns into resistance. And it seems to be repeating here. We have support on the breakout turns into possibly resistance. We don't know yet. It could be that we are trading here a trendline breakout. And if we get above this level, it could be a good signal to go long. But as long as we are below the trend line, as long as we are below the structure, we could see more shorts easily. We zoom in and we see the price is currently trapped. It is trapped between the long-term trend line, trapped between this level, and trapped here below this short-term level. Resistance turning into support. So at this point, it's not 50-50, I would say. The chances for going higher or lower, I don't think it's 50-50. I would still think it's a little bit more bearish because overall this is a long-term bearish trend and we have not seen support being broken or resistance being broken rather. We are still trading below resistance. So we are a little bit more bearish than bullish. And this is then what you wait for. First of all, you have your fake out. And not only a fake out, you see the market try to get above the trend line. And then this is again the key. You have strong selling. If you see on a fake out that you have strong selling, this could be the tipping point, the power shift. And then you can see we have the break and retest pattern. And that's then the final piece. You can see we nicely break and retest this pattern with this reversal candle and then engulfing candle and then off we go. So a really, really nice trade study that helps us understand and look at complex chart situations. A final one. We have a trend line and it seems like we're breaking out, right? But also we have this huge green candle that gets us immediately inside the trend line. In such cases, I would still think that the trend line definitely has a place. We could also say here's a previous low. So it definitely makes sense to say, okay, we have maybe a fake out at a trend line. We don't only have fake outs at horizontal support and resistance, we can have fake outs at trend lines. So we break below it. And what is very important about fake outs is that very often they happen with momentum. You have a huge candle, that's the breakout, and then you have a huge candle that gets us back into the range. That's the key. If you see a fake out with those strong candles, that's better. And we can zoom in, and what we see, this is here our fake out. We are on the 2 hour now, after being on the daily. So 2 hour, we have this lower time frame pattern. We are still trading below resistance, but we also have the confluence of the long-term uptrend, the fake out. So the final trading plan piece is we wait for the market to clear this high. And if the market gets above this high, we would get into a long trade and continue the direction higher. And that's what happens. You can see this is the first time we had a breakout that didn't fully succeed. We had a deep push. So you may have realized maybe a losing trade, maybe a break-even trade. And then afterwards, the market comes around and fulfills the trade idea. So sometimes your trade idea will not work. Sometimes you need more than one try, more than one attempt. If the signals and if the criteria still match, if you have a valid second entry, you can definitely do that. And that's then how you can use trend lines with a multi-timeframe approach and price action. I hope you liked this video. I hope you learned something. If you did, as always, let me know in the comments, and then you will hear from me next week.